Roll call. That's your other dog.
Here.
Attorney General Wrigley,
Here.
Governor Armstrong,
Here. Pledge. Joker.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice.
Is there a motion to approve the land board minutes from the previous meeting? So moved.
Second.
All those in favor?
Aye.
Opposed? Motion carries. Operations, Joe.
Thank you, Governor. Good morning, Governor and land board members. Have a gift for you this morning. The agenda is not as long as usual, so probably hopefully get a little bit of time back in your day. So you're welcome for that.
Thank you.
Already does that for us.
Or chars for lunch. Ooh.
I join you there.
I have no time back in my day.
So I will move. Excuse me. I'll move on to the commissioner's report on page 2. First item, we have our one of our 2 annual oil and gas online lease auctions starts on March 17th. Goes through the 24th, so a week. We have 178 tracks that were nominated, so we had a good amount of tracks nominated. We'll see how it goes. We'll give you a report after the auction. See how it goes. And that is through our leasing firm, Efficient Markets, which the board had a presentation from last meeting. We did attend the oral arguments before the Supreme Court, North Dakota Supreme Court on the Leland case. That was February 12th. I think our counsel did a real nice job there. Some complex, detailed, in the weeds issues that hopefully the judges can sort through. But we'll wait for a decision on that here in the next few months. Morning.
morning.
And next item, Treasurer Beadle was, auditioning for his next career, radio host.
I as a short term, I was called on short notice to fill in.
And he was filling in on KFR radio, and he asked our unclaimed property director, Susan Summerfield, to talk about unclaimed property, and they had a good conversation, and it was real fun to listen to, and I think there was some good information put out there for the public. So thanks for the invite.
Thank you for Susan for taking time out of her President's Day when everyone else is off and
Yes,
to come on air and talk about it.
Yeah. And then on the administrative rules, as the board recalls, board approved the proposed revisions. The Attorney General's office has given a sign off on those, and we have our hearing scheduled before the Admin Rules Committee on March 12th. So assuming nothing changes, we'll be going to present there to that meeting. And then on the National Association of State Trust Lands Annual Conference, going to be hosted in Medora, July 12th through the 15th. Planning still continues. We do have the library venue nailed down. It was a little bit delayed because they're just getting their event staff up and running. So they finally have some full-time events people that are starting to get things scheduled and reserved. So we do have that venue secured now. You can see the logo, which we're proud of. Team and Caitlin did a nice job working on that. So we're proud of the logo with a little help from AI. And we are going to plan to do an early registration opening in March here sometime. And the board members have all been reached out to you and or your staff, inviting you to the event formally, asking for RSVPs. So if we need any hotel reservations, we can do that because we think they're going to fill up quick. So any questions on the commissioner's report? All right, we'll move on to the financial dashboard. First one, Common Schools Trust Fund, record $8.436 billion in that fund. That is as of November, end of November. So we anticipate we'll probably hit 8.5 here when we see the next couple reports come out through December and January. And that's a record, again, another record. So just we continue to see good growth out of that, which is great. We go down to page 5. You can see the revenues for the Common Schools Trust Fund. We had continue to have good investment performance. You can see tracking, only partway, not even halfway through the biennium, we've had really good investment growth of about $400 million, which compares favorably to the last couple of years, or similarly, which we've had, strong markets to help us, but we also had really strong management too from our investment team. So, any questions on the Common Schools Trust Fund? Okay, we'll go down to SIF. You can see that the SIF had a cash balance of about just under 1.2 billion. When you take into the committed funds balance and appropriated commitments, the available balance is around $51 million. That's as of the end of November. So you can see kind of the trend there where it builds up, starts to spend down as we distribute funds for appropriations that were made. And if we go to page 8, which is the tax waterfall, you can see that SIF has not received any funds from that, and not for quite a while as it goes through all the different buckets there. So I think maybe you had an estimate on that, Treasurer.
Yeah, so we the social services fund, we just added another 50.6 million to that. So we're at about 138 million on that one. We put 50 million in a month of average over the last 3 months. Budget stabilization fund is sitting at about 995 million right now. So it's virtually at its 15% cap of the general fund. So I expect we'll start flowing into the general fund next month's distribution. And if we keep at that roughly 50 million a month, we'll start pouring into that last SIF by the end of the year. Originally we were averaging around 45 million, but winter hasn't hurt that much as normal. So
good. Yeah, so it'll be fun to watch those funds slow down until they start hitting the SIF funds. And then our total assets for the board under management, just under 12 billion. Pretty confident. That's another record. Pretty confident we're going to hit over 12 billion. So, any questions on the financial reports? Okay, we'll go through the division reports. We have Surface Division. We issued 4 right-of-way agreements in January for about 20,500 for the trust. We have a nice photo there, McKenzie County, with a little fog from our team that goes out in the field. And then next page, oil and gas royalties. We collected you can see just under 30 million. So down from prior months a little bit, getting back to where we were, monthly collections back maybe a year to 2 ago. But still, still fairly strong. We're only down about 37 million fiscal year to date. So seen a bit of a drop off, not a huge amount though. And if you look at the next page, kind of shows the trends where the yellow line is the production, which has remained pretty steady. The black line, the price you can see is trended down over the last year, and that's really where we're seeing a little bit of the trail off in the total royalties. So although WTISE has perked up a little bit in the past month here, going from the 50s to, I think I checked this morning, around 64. So, and again, these are reported for a month or two. So the oil is reported a month lag, the gas is 2 months. So we have December oil production and November gas. So it's kind of 2 months and 3 months. So, all right, any questions? Oh, and then unclaimed property. We go to the next page, unclaimed property. We paid out about almost 900,000 in unclaimed property claims to rightful owners. Received just a small number of whole reports because it's one of those off quiet months. But the good news, or the big news, is that we're sending out another batch of direct mail checks. And this is again where we're trying to affirmatively go out and send out the money, trying to do some verifications on our own. And if we think there's a right claimant that we'll just send the check out to. So what we do is we send out a letter informing them a check might be coming. And then if we get a return mail, non-deliverable, we'll cancel that check out. But then they kind of have a heads up that the check's coming, and then a few weeks later, we'll actually send a check out. So we're going to be sending almost close to $1 million out to constituents directly. So we're excited for that. All right. Any questions on the division reports? No? Okay, we'll move on to the investments. Our Chief Investment Officer, Frank Mihail, will stop up and do the reports and then hand that to our recommendation.
Thanks, Joe. Morning, Dr. Armstrong, and members of the board. Pleasure to be here. I have with me today Casey, Madeline, and Dan from Newberger Berman, who we'll be handing to in a bit for a presentation. And online we have RVK, Kirby Francis, and I think Jen might be on as well. Yep, there she is. So I'll jump into the performance dashboards first before the investment recommendation. On slide 14 is the snapshot of the portfolio. Investable assets now reach 8.8 billion. On slide 15 shows our actual versus target weights of the portfolio. So today's recommendation is a private equity recommendation, and that's to help us reach that private equity target, which we're currently underweight on. And you can see that we're overweight on the public fixed income, and so the goal here would be to use that public fixed income to invest in private equity and get us closer to those targets. On the next page, slide 16 shows our flash performance report. U.S. equity and hedge funds have done really well, double digits in the last year, but barely a blip on the radar compared to what international stocks have been doing for the portfolio. And not much changes on the last two slides with regards to capital calls and liquidity waterfall. Is there any questions on the dashboards before we jump into the recommendation today?
Now the 40% flash performance report for international is just eye-opening.
Yeah, and our particular managers have done exceptionally well adding excess returns over the benchmarks there. So we can jump to slide 19 with the staff memo on the investment recommendation. So today's recommendation is a $300 million commitment to Newberger Berman to establish a private equity fund of one. So this fund of one would be a custom account for North Dakota, and underneath it would have three sleeves. The first sleeve would be an evergreen fund that would act as a rebalancing center. And by the way, this fund of one is designed to be a perpetual vehicle, to stay invested in perpetuity. And so the first sleeve would be this evergreen fund structure that would be the rebalancing center of it, that would be able to manage those recycled distributions or redeem to help rebalance around our targets. Then we would also have a co-investment sleeve that would allow us to take higher conviction or put more capital towards higher conviction investments. And then the third sleeve would be a closed-end drawdown fund series in private equity secondaries. And what we would ask today that we haven't asked for before in previous recommendations is we would ask for to authorize permission for staff to continue to re-up into those closed-end vintages into the future to help rebalance that portfolio in perpetuity. So what's different about that is in the past, for example, like with our venture capital funds, those are all closed-end funds. Every couple of years, they come back to market with a new fundraise, and we come to the board and say, hey, we recommend investing in this new fund series. With this structure, what we're asking the board is by setting up this perpetual fund of one, as we invest in this closed-end secondaries fund, that you would grant staff authority to re-up in that fund for future vintages, and give us permission to do that through this. So I'll pass it over to Kirby from RBK. Question.
So when you're talking about re-upping, would it be within the current amount of 300 million limit that we have here that would be spread across? Would it be re-upping to keep it at that as other stuff comes out and capital's paid back? Or would you be asking for authority to go beyond that 300 as you see fit?
Good question. So our initial target is 300.
Yeah.
But it'll be designed to grow in parallel with the growth of the total.
So it's mostly the 300 is only pegged as a percentage of the fund. That's what we have.
So at what point in time do we have oversight then? Or whoever follows Michael, follows Drew, perpetuity is a long time.
Right.
The rule against perpetuities is also studying for that as long as current.
So, well, I guess what we would ask is that grant staff the authority to make that judgment call of whether or not, like we would have authority to say whether or not we want to re-up on the next vintage and how much, or whether we want to stop it.
So what is the reporting required? Like, I understand like the concept of granting staff authority. I don't understand the concept of us never knowing what's going on. Like, do we get,
Would they be?
do we affect?
We can talk about that. And if the board's not comfortable, we can take that up too, and we can bring each new vintage to the board when it comes up. But, I'm just asking, would there be some sort of notification to the board? Hey, we're re-upping in fund number 2 or whatever.
Yeah, we could certainly provide it, and I think that would be the intent. Every board meeting to give updates on the portfolio.
Well, they'd be a part of our quarterly performance reports as well too, where we get the breakdown by manager for those quarters, right?
Right. So, this would be very similar to the relationship that we have with Grosvenor right now, and so. On our performance reporting, that shows up as a single line item, but it does invest in.
It's got multiple tranches with it.
Yeah, different sleeves underneath. We can certainly include, I guess in the recommendation memo, if you want updates every time we amend the contract. Because what we would do is we would amend the contract with them every vintage.
How often does that happen?
Probably 2 to 3 years.
Yeah, 2 to 3 years. For that one sleeve.
So if we do it every 2 to 3 years, I'm putting my old legislative hat on. Current legislators can't bind future legislators. What would be the process if we agreed to that? What would be the process of unwinding that? Like if the next governor didn't like it, or the next treasurer didn't like it, or wanted to be updated. I've been here for a year. You guys have been here longer than this. We take your consideration and your input very, very valuably. I can't recall a time where in my time we've been like, that's certifiably insane. We're not doing that. That doesn't happen. But also at the end of the day, like with all due respect to staff, they don't answer. Perpetuity is a long time.
Yeah, and this is, and I told
Like
Frank.
if we were, just real quick, if we were doing it every 2 weeks, I think we want to call special board meetings to deal with that every 2 weeks. If it really is every 2 to 3 years, I'm not sure coming to us and just getting our stamp of approval every 3 years is a terrible idea.
Yeah, and I told Frank, make sure you hit this point hard, because I want to make sure the board understands. And if the board's not comfortable, we can just take that.
Particularly if you're doing a really great job and we are talking about exponentially more money than $300 million.
Which we hope is the case.
The other thing I have found out in my short period of time, when you all do really good in investing, the correlation to the politics of that aren't always a 1-to-1 ratio. Like, this is still a political body that answers to other political people, and well, we sometimes they have a lot of opinions without necessarily the right amount of information.
Right. Well,
I don't want a good thing to turn into a bad thing. That's the answer.
how about we hear the presentations? And then if the board is not comfortable with that, we can just strike that last part of it where it says, on the recommended, it says, and authorize staff to make future commitments, to the underlying fund series to maintain target. We could just strike that too if the board's not. I mean, it's not
the governor's concern, probably.
I'm not even sure I have a concern. It's like, it's how we structure it is important.
Yeah, your point is.
Yeah, it's not a huge burden for us to bring that. And we're just trying to find that balance between, bringing things to the board and necessary, but not, bringing too much. But if you're not, that's why we wanted to have the discussion. And like I said, I told Frank to make sure that board understands. And but we can.
Sometime between never and forever. And also determinative, right? I mean, it should be determinative, like not subjective, like, oh, now seems like a good time. Don't you think? Like whatever it is, a year or 2 years.
Well, is that okay if we just have the presentation?
Yeah, for sure.
If we want to
Yeah.
strike that last sentence, that's part, we sure can. Wouldn't change the main.
Yeah, it doesn't change the rest of it, correct? Okay.
Yeah.
So I'll hand it over to Kirby from RVK and he can jump into the memo.
Yeah, thanks, Governor Armstrong and members of the board for having me. It's great to be with you today. It's just a reminder, I'm Kirby Francis. I'm RBK's head of private equity and venture capital. We're here recommending and adding Neuberger Berman as a fund of one custom account partner to the portfolio for a few reasons. When we start to see portfolios move up towards the size that you all's has, which is great to see, exceptional results and strong markets along with contributions have moved us into another zip code, which is great. Plus the revised private equity target. We think this is the point when it makes sense to add sort of a second strategic partner in private equity to provide diversification and mitigate, the kind of concentration that comes with sort of a single partner and that risk. So we think making the decision to add a second fund of one here makes sense. And as a refresher, Neuberger Berman was the second finalist from the original RFP we went through to source Grosvenor back, call it 5 or 6 years ago. They're a firm that RVK has worked with for over a decade and a half, I believe, on the custom account side. And they have a deep history in private markets, and we know they do a great job with clients. So we think it makes sense to use them here for this role. As Frank mentioned, there are a few different sleeves under the hood. First, there is this evergreen product, their Global Access Fund. There's a lot, the evergreen world in private equity has exploded exponentially over the last few years, and we think there's a lot of products that aren't suited to institutional portfolios, but Neuberger's is one of the best. It's designed for institutions. It's not a high net worth product that institutions can piggyback on. It has fair terms for institutions. It has thoughtfully designed liquidity provisions. We think it's best in breed in that arena and is going to provide, as Frank noted, an important liquidity valve and also ability to top up when the private equity segment of the portfolio needs it. Second would be the secondaries funds. As Frank noted, Neuberger's in the market with Secondaries Opportunities Fund 6. We have other clients, multiple other clients in that fund outside of fund of funds. We've surveyed the secondary market. I've met with over 21 secondary managers just in the last year. RVK knows of more than 70 secondaries funds. We think Neuberger's a great partner here. They're very strong on the GP-led continuation vehicle side of the house, which we think is increasingly important as that's around 50% of secondaries. The last sleeve of the account will be direct co-investments. So North Dakota will be investing directly into companies alongside the best private equity sponsors in Neuberger's portfolio. This is a much lower fee way to access private equity than investing through funds. It has some additional risk because these are company investments, so you don't get the built-in diversification of the fund, but we think it's reasonably sized and will be balanced out by the other aspects of the portfolio, secondaries, which are very diversified, and the Global Access Fund, which has dozens of companies in it as well. So the three of these sleeves, which staff and RVK and Neuberger iterated on for a long time, we think provide just the right amount of exposure in a series of investments that's going to benefit the portfolio in multiple ways. So we support the recommendation here and happy to answer any questions. The only thing I'll mention is with respect when you're thinking about the secondaries funds and additional commitments, RVK expects to underwrite those funds alongside staff independently. So if for secondaries fund 7 or 8, we'll be underwriting that to make sure that it, passes our recommendation process and so on. But happy to answer questions about the product or Neuberger.
Questions for RVK? We'll pass it over to Neuberger Berman. We'll jump into their presentation.
Thank you all for the time today. Thank you, Kirby, for the introduction. We appreciate it. My name is Dan Ranselberg, and I serve as the lead client advisor for your team. My colleagues Casey and Madeline will be doing the majority of the discussion on the private equity, but I thought I'd just give 1 or 2 minutes introduction to the firm, as this would be a new relationship for you and your team. So Neuberger Berman, the mission is really to deliver compelling returns over the long term. That's all we do. A very diversified business. So on page 2 of the presentation, I'm not sure the page number it is.
22 or 32?
32. Just gives a very brief snapshot of the organization. So very diversified business across public equities, public fixed income, and private markets, where Casey and Madeline sit. What that ultimately means is it's a stable business and also a lot of resources for Casey and Madeline's team across the different markets. And I think the long term is also a key piece here. Your pool of assets exists into perpetuity, and we're aligned on that front. We're a fully owned firm with over 750 employees who own the firm. So we do not have short-term shareholder goals to report to. It's really just ourselves and our clients. And that helps with the long term. That helps with stability. So you can see on this page, 95% stability, even higher in the private markets teams. Culture rated the best or second place to work over the past 10 years each year. And ultimately, that all leads to great long-term performance. Before I hand it over, any questions on the firm or things you'd like to talk about there? Awesome. Yeah.
Okay, great. Well, thank you for having us. I'm Casey Boyer, Managing Director at Neuberger Berman. I'm based in our Dallas office, and I've been with Neuberger for about 19 years. So kind of speaking to that stability point that Dan mentioned. And I'm joined by my colleague Madeline, who also sits in Dallas and has been with Neuberger for about 10 years. We're both on the investment team. So one of our top priorities also is looking at investment private equity funds or co-investments on a day-to-day basis. If we go to the next page, and I invite you to ask questions as I'm going, it would be great to have this conversational. I don't want to just speak to you most of the time, but on page 3, our platform has been built over many, many years. We have been private equity investors for over 35 years. Last year in 2025, we committed over $20 billion of capital into the private equity and private credit markets. So we've built a very stable, integrated platform where we can really invest across the spectrum within private equity and private credit. And that meaningful scale really gives us an opportunity to partner with private equity firms across the board. We can invest into their fund, which if you look at the pie, is the primary portion where we've invested or have assets under management of over 41 billion. Co-investments where we're investing directly into a company alongside a private equity sponsor. And then the secondary portion, which is where we're either buying private equity assets on a discount or partnering with a GP on a specific company for a GP-led transaction. In this asset class, partnering with the correct investment managers and private equity firms is extremely important. Return dispersion, it can be very large within the private equity asset class. So building this scale and really partnering with the GPs or the private equity funds is very important. And if you'll notice, everything that we're doing is a way to partner with them. We can invest in their fund, we can invest in a specific company with them. And then we also have a really big credit team where we can actually invest directly into their companies from a credit standpoint. We pair this kind of investment process with our experience in building custom accounts, and that's really what we're focused on. We partner with important institutions like you all to build exactly a customized portfolio of what you need. So that would be more on the, whether you're looking at a fund of one, an evergreen structure, and really being able to build it out in a way that you need from a governance standpoint, a liquidity standpoint, and trying to deploy capital efficiently.
Their states, I'm sorry to interrupt you, Casey. What other states are you working with also?
Yeah, so one of our largest long-term clients that I've worked with for about 15 years is the Texas Permanent School Fund. We really built out their whole private equity platform to a point where they've now, well, our goal actually in that program was if we did our job correctly, we would work ourselves out of a job. And so now they actually invest in primaries themselves, just starting co-investments. So we still have a very strong ongoing relationship with them. But we've also helped them learn the market and bring in an internal team. Yeah. We work with Wyoming. We work with a number of university endowments as well around the country. So how do we do that? How do we build that engine? It really comes down to the people. And if you'll notice on page 4, we have a really big team. So we have about 200 investment professionals who are doing the due diligence on investments day in, day out. And then the other half of that, which is equally as important, is the non-investment professionals, where we're supported by legal, compliance, finance, operations, technology, really any team member that helps us get the investment from closed to monitoring and making sure all the risk and compliance are in place. As Dan mentioned, we pair that depth with stability. If you ask most of the individuals on our team, a lot of us have been there and kind of grown up at the firm, which is provides just a really great culture. We all know each other extremely well. So on our private markets teams, we have a 98% retention rate. So we kind of joke around, if you don't like us now, don't hire us, because I'll probably be the one coming back to you year after year. So sometimes we let people leave. We try to keep people as long as we can. And then
you should take it very personally if we say no.
It's hurtful. And then the last thing I will focus on before moving to the proposal quickly is, I mentioned it a little bit before, but just circling back to custom accounts. We've been partnering with clients in this method for over 20 years. And of course, our number one priority is always returns. That's what we're here to do, is to provide returns to your state. But the second thing is service alpha. So we really want to be highly responsive, easy to work with, really creative in how we're investing and structuring your investments. And practically, that leads to a tailored portfolio construction, a structure that makes sense for you, reporting, operational support. We try to be kind of good. So both the investment side and how we structure is very important to the relationship. I will spend just a summary on the proposal. Kirby did a great job. You guys kind of know the structure already, but our objective really is to partner closely with your team and RBK to implement this custom evergreen fund of one. It will be all co-investments and secondaries, which is a part of the market that we are very well versed in and have had quite a bit of success. We would be pacing towards that 300 million NAV target, and would hope to get there over a 2 to 3 year time period.
Wait, that was page 37, Caitlin, she was talking on there.
What industries are you typically targeting?
So we are pretty diversified. Technology, industrials, healthcare has been really big pieces of our puzzle. But if you look at the pie chart, there's really no single industry that's really more than like 30.
Sure.
And after that, it's very diversified. We don't do real estate. But other than that, we're pretty agnostic.
And then are you all across the private equity landscapes of lower markets, middle markets,
Yeah.
buyouts, growths, all that, like everything?
Yeah, in co-investments and secondaries, it really lends more towards buyout, which is where we focus. Venture co-investing is pretty difficult. It's either you get a 0 or you get a 5-10 times. So we are more focused on buyout but within buyout, it's, we can do growth deals all the way to large cap. Great. Let me turn it over to Madeline for just a couple minutes on the proposal.
Thanks, Casey. And I'll spend a couple minutes going through a little bit more in detail on what the target investment allocation is. So when we were designing this with Frank and RVK, we wanted to put together 3 complementary sleeves in order to accelerate diversification, optimize the pacing of getting capital in the ground, and then also being able to manage that liquidity. So the evergreen portfolio, we expect to be at 50 to 75% long-term target allocation. That will be invested through our Global Private Equity Access Fund. And this is a core exposure to our co-investments and GP-led secondaries, which are direct investments into private equity-backed companies, what we think have the potential for long-term growth. And in addition, this evergreen product also has opportunities for liquidity to help manage that NAV target within the overall North Dakota portfolio. The secondaries piece will likely be a 10 to 20% allocation split across the GP-leds and in the traditional LP-led secondaries. And the nice thing about secondaries is that it provides an enhanced diversification with exposure to likely over 1,000 different companies. You also get some backwards vintage year exposure, and it helps mitigate the J curve. So that initial fee mitigation in the early days of the portfolio.
Madeline, can you give that definition of the difference between GP and LP-led deals?
So an LP-led secondary is more the traditional type secondary. So that's, we're going to buy fund interests or positions from an LP that's looking to sell for liquidity. And so those usually are struck at a discount, and it's an older vintage private equity fund. And then the GP-leds, which now represent 50% of the total secondary market, are much more complex structured vehicles. And typically this is a GP's crown jewel of an asset that they want to keep and continue, but because of the term of their underlying private the term of the private equity fund, they need to put it in a new vehicle. So we help structure that. LPs are able to either take chips off of the table and get liquidity for their personal needs or continue to stay invested in this new vehicle. So this is a huge part of the market. Our team, the large secondary team that's highly sophisticated and experts at structuring these different types of transactions. And then the last piece is the direct investments portion, which will largely be in co-investments. And this is the part of the portfolio that we can really be responsive and tactical to the developments of the NAV, or as Frank mentioned earlier, specific companies or industries that we really like. And we can lean in or even lean out based on the NAV development of that portion of the portfolio. Then turning to page 39, I can give you just wanted to walk you through what the portfolio might look like at a steady state on a look-through basis. And this is actually where we started when designing the portfolio. We worked backwards based on how these strategies have historically invested. So within investment type, 90% of the fund will likely be direct investments with a little bit of the LP-led secondaries. And this is particularly beneficial in the co-investments because at Neuberger, on a vast majority of the deals, we do not pay a fee and carry. So it's a very fee-efficient way to access the private equity market. With regard to asset class, there'll be a strong tilt towards buyout with some selective exposure to opportunistic investments where we think the risk return is compelling. But importantly, like Casey mentioned, those opportunistic investments will be in value buyout or growth type assets, not venture capital or a distressed asset. And then lastly, on the geography, be anchored by North America and Western Europe. And these are the most developed private equity markets, the largest set of exit opportunities, and where we have the strongest relationships. So that's where we think that it's most prudent to invest within this portfolio. But overall, we think that within the evergreen and secondaries, get the breadth and depth of the portfolio, and we're also able to provide focused and high conviction exposures within the direct portion of the portfolio as well. I'll stop there and open it up to any questions for me or Casey.
How is the private equity markets in general?
So we've seen some good uplift over, I would say, the last 6 months. You probably saw headlines of there hasn't been a ton of liquidity in the more recent years. A lot of that was due to interest rates and kind of buyers and sellers not being able to get to an agreed upon price, really just based on the seller having bought at a lower interest rate and a buyer now having to buy at a higher interest rate. But we saw some really good distributions and realizations within our portfolio over the last 6 months. And that kind of seems to be the trend within the overall private equity market. There's a lot of capital going into the space, but there's also a lot of opportunity. That we still see a lot of great transactions kind of in that lower middle market where you can have, access to a more enhanced return. We really like the large cap buyout part of the market because it's really steady. Those companies are really big. There's not a lot of risk, but that also does give you a little bit, muted return. So when we combine those, it provides a really nice portfolio where you're getting kind of access to both types. But the market, it's been good, and it has continued to develop ways to create realizations with it. So I think now is actually a really great time to invest.
With DOL rule changes that are letting more of the retail investors through their 401ks or whatever investing in private markets, is that flush of capital coming into this area? Is that going to have any impact muting potential returns or anything?
It's gonna have an impact. So the question is how. I think for now, what we've seen is that retail client is a very complicated client to incorporate into private equity. And so really the only private equity firms or transactions where you're seeing that happen is on the very large scale buyout firms. They're the only firms that have the ability to
Make that offering.
make that offering, work through that compliance risk.
Sure.
So again, kind of why we think the middle market is really attractive because it's still really untouched by that retail client. I think there, in the world of private equity, there's always been growth since the 70s. And the question has always been if there's too much capital in the market. The point is there's more private companies than ever before. So
It would be like a 3-4 year backlog where they haven't been doing a lot of IPOs and exits. So it's
exactly. So I think we're okay.
Yeah, but I figure it's gonna only be like the Vanguards or whoever that's gonna offer some of those funds that will get approved.
It is, and I'm sure that will move down, but it's going to be wild. That's not it. Thank you for having us. It was a pleasure to work with your team, RVK, to work through this proposal. We are.
Great.
Oh,
I was just gonna, before the board has their discussion and decision, I was wondering if Jen from RVK, did you have any insights for the board, Jen, on the questions they had about that second part of the recommendation?
Yep, thank you. Governor, members of the board, I think you raise a good question about ongoing diligence and the board's responsibility for oversight from a fiduciary standpoint. I think the spirit of the recommendation is most certainly to not circumvent the board's ability to have oversight and monitor this relationship. But I also think we balance that with capital efficiency and maintaining long-term strategic partnerships here. Certainly recurring due diligence is something that RVK takes very seriously. That, you heard Kirby mention that anytime a new closed-end fund would be considered for part of this mandate, it still has to pass standard RVK due diligence. That the nature of a perpetual relationship doesn't necessarily mean that everything in the relationship is a foregone conclusion, that we expect regular due diligence on all of the underlying investments. That said, I don't think that a 3-year review, and if you recall the two investments, the series that you have with Grosvenor are both 3 years. So the initial was in 2021, and then the second series was a second 3-year commitment with Grosvenor in 2024. I don't think that a 3-year investment review and re-up period is unreasonable. I think it's perfectly appropriate if that is the preference of the board. But I think the spirit of the recommendation includes kind of regular due diligence from RVK's standpoint.
In the contract negotiation stuff, I mean, you negotiate in there and you set the parameters for the deal as well, like the hard and soft limits and everything. And as far as your monitoring and everything, so you can make sure that any of our managers are staying on track or staying within what they say they were telling us they were going to do, right? I mean, that gives some trigger and some ability to throw firms on a watch list or throw people on whatever. We kind of have that across your different managers.
Right.
So,
Yeah, and I mean, I don't want to fly a whole bunch of people in here for a 5-minute, yes, we're going to extend it. Like, I don't, I mean, all of that, but also, I mean, again, like, I mean, how it's structured matters, because no matter what due diligence is being done, when we do these presentations, these are open meetings, we get to ask questions. Sometimes we even ask smart questions. If it's every 2 to 3 years, I understand it might be a little bit of work or maybe a lot of work. I'm not sure I can't get there. I'm just not sure without knowing what are the metrics before we bring something to us? Or what are the metrics before we're like, this relationship is fantastic and we should do more of this, or we've got some issues and I mean, it's still financial markets. I think we get in trouble when we don't do this stuff. Like, I don't know how many people are watching this. I'm assuming not a ton, but they have the option to do it. And that's part of the process. And if it's only every 2 to 3 years, I think we should err on the side of coming and saying, hey, this is done really well. This is where we've seen good success. This is where there's stressors we didn't know about 2 years ago. And this is how we are adapting to that. And all of that. I mean, and that's the backside of a lot of financial decisions that get made everywhere else in North Dakota government that don't affect these guys. So, like I said, I'm not sure I can't get there. I just have, I think, some more questions.
I mean, I think if there's concerns or questions, we can, I mean, I'm fine with that. It's not, like I said, it's still the need of what we want is still there. I think that's right. So I'd be fine with striking that lot if that's what the board wants to do.
So I got to keep our airline flights.
You made a good point about metrics. I know a lot of other states, what they do is they give discretion to staff based on a dollar amount, like anything, below 100 million, you have discretion, but over 100 million, bring to the board. We can think about that in the future if we want to implement something like that. But in today's recommendation, I'm comfortable either way if we strike it. Maybe Jed, one more question for you. Just from an operational standpoint, is there any questions we should be asking ourselves there, whether, we bring it to the board or have staff discretion? Do you think it makes a difference at all operationally?
Let me ask the second question first. If we strike this language and move forward, we come back in 2 months and want to change it a little bit, what happens on our end? Like, the second question is if we strike this language and we determine that we want to set some triggers or whatever, how does that affect the relationship? Like, I mean, am I $60,000 in additional legal fees to renegotiate something, or is this more our end up?
My response to that would be if you strike the perpetual nature of the relationship, we could structure this. It could be a 3-year term and revisit in 3 years. And if there is an appetite to pursue a perpetual relationship at that time, I think that would be a perfectly reasonable approach. I think if you move forward with a finite time series before the board has an opportunity to review and reconfirm that this relationship is one you'd like to maintain, I think you could just move forward with that as it stands, and there wouldn't necessarily be a need to backpedal and recontract anything. If 2 months from now you decided a perpetual relationship is fine, we could do 3 years and then do a perpetual relationship 3 years from now.
Well, go ahead.
Yeah, for sure.
So, the way we structure, typically, you guys, if we're not doing a good job, you fire us.
Yeah.
You can it. The perpetual nature makes the operational and legal costs less, so that it's not a legal negotiation each time. I think what you're really talking about is just the like monitoring it and watching it and having a point in time where you can say, yes, no, it's doing well. And I think from that standpoint, it just is that's more on your side, but from our side, it's operationally very efficient to do it in this manner.
I guess what I was thinking, I wasn't saying we changed the perpetual nature. I was just saying that under the Series 3 closed-end fund series, if there is a new vintage, we could still maintain the relationship perpetually, but you could just bring that to the board.
Yes.
Right? And that's all I wasn't thinking.
Our staff can bring it to them.
Yes.
Like that, I think it's staff versus the board side of it. I don't want to create a bunch of money being spent that doesn't need to be spent. I think it is good that we come in and say on our end that every 3 years, like I said, if you guys determine we got to bring everybody here and show us something, great. If you determine that Joe and you guys can do it and they don't have to be here, great too. But I think eventually, I mean, I don't want to screw up. I mean, we meet every month, so we're not, except not in March. But so, I mean, as far as a government or, I mean, a state, I mean, states, we move fairly quickly. Like, we're not going to put you on the hook because the decision was made the day after a quarterly meeting and we don't meet again for 3 months or 6 months or anything like that. I don't think it's your guys' end so much as it's how we make the determinations on our end. I'm just asking Jen if we do that internal mechanism, if that affects the relationship. I don't want to change that. I agree with you, Joe.
No, I think that review of any new closed-end fund commitments would be something that RVK and your investment team would work on collaboratively. And I think the cadence right now is new relationships have come in front of the board. So you have an opportunity to meet the folks that would be managing money, but re-ups under the same organization is not necessarily something where we'd make the folks from Newburgh fly out to do the next fund series, Fund 7 or Fund 8, that's kind of part of RVK's routine diligence, and our review and recommendation is something that we would put in front of the board.
Getting to our level every 3 years makes sense. Like getting to our level every makes sense to me. I don't want to change the structure of the agreement, but I think getting to our level every 2 to 3 years probably is a worthwhile endeavor.
I think that keeping the recommendation, but just striking everything after the comma there. So striking the and authorize staff to make future commitments to the underlying closed-end fund. Basically, all you're saying is that we're going to maintain the relationship, but if there's a new, what do they call it? A new vintage or a new series fund that comes out under the 0.3 to the closed-end fund series, that would be brought to the board. And it's not that you have to come out and present it. It could be RVK and staff presenting it.
We've got some great restaurants to try out though, so you might want to come back all the time. But
Yeah, I like this.
Makes sense.
And Jen, to clarify, the difference is with our other manager, that is the entire fund of one is a closed-end series that winds
Correct.
down.
Yes.
Because it has the evergreen fund underneath, this
Yep.
fund will be a perpetual fund of one, but we would still come back to the board every 2 to 3 years, just to re-up in that closed-end series.
And I guess the word perpetual just means we keep it until we fire. Like you said, we can always fire them. I mean, it doesn't mean we have to stay. And perpetual doesn't mean we have to stay. It just means the structure stays in place. We don't have to change it
and that's why
until we feel like we're not doing it.
and that's why we set the threshold limits. That's why we have watch lists so we can put them on. I mean, we have tracking for that.
It just
All
means
these
that
ugly words, swaps, but it's fun.
Yeah, you want a watch list.
Right. All right.
So yeah, I guess there would you have to make a motion to just amend that language and strike that last sentence.
We didn't do that, just read it.
Yeah,
so if someone's ready to make a motion with that,
Just look and see if there's any other discussion first.
I don't think so.
Mr. Chairman, I'd make a motion that the board approve a $300 million commitment to a perpetual private equity fund of one with Newburgh Berman, subject to standard legal review and documentation.
Second.
Discussion.
Do we have any of these types of perpetual, sort of, not in terms of a relationship with, with a vendor, but sort of staff authority that doesn't have some sort of monitoring cycle on it? Because I think this is a good discussion. It has nothing to do with the very thoughtful presentation that was put together, but just from a new guy and what is our sort of consistent approach to oversight and review. I mean, this has been a rich discussion, which makes me think about, does this apply anywhere else in terms of previous action? Most of the folks here I'm the newest, but I would say that we're all still pretty new. And so do we need to apply sort of the same philosophy of this discussion to other actions that have been made by the board historically?
I think we do have other evergreen funds.
Yep.
I think basically those have been approved with the understanding that, just like you would approve just like a public equities fund, that as long as they're doing a good job, you would maintain it. So the the reason why you create an evergreen fund in the private equity space is because, as was kind of brought up today, there's constant churn, right? Your fund might get bought out, and then if it's a closed-end fund, then you have to start up a new fund, and so the evergreen structure, it's just a different structure. So it's not really that it's any different than just buying like a public mutual fund. Sure. Where if your public mutual fund, like if, let's just say we had brought a public mutual fund for approval. Right. The performance of that would just be brought to the board every quarter as we do our standard performance. And then if it's underperforming, we can put it on the watch list, we can take action, you know. Did I kind of explain that right, Frank?
Yeah, that's right.
Yeah, okay.
So yeah, we do have other evergreen funds. We don't have any situation particular.
Where it's the two different funds.
It's
It's the evergreen plus the closed in, because otherwise that would make sense. Because otherwise, like the closed in one, as that pays out, then we go to something different. So it's
This one's in at least the one bucket's new.
Yeah.
It's kind of cool.
And
Thank you.
you know,
You're welcome.
the idea, what we're trying to accomplish here is we're trying to stay true to who we are at the staff level of with a small team of 3 investment professionals. Try doing these evergreen fund structures helps reduce the operational burden. And where a lot of other endowments, if they've got like a big 50-person team, you know, they can re-up every vintage, underwrite every time, and build up
can help you do that now.
large line item portfolios. And so we like to stick with these evergreen fund structures because it helps us operationally.
This would be the equivalent of like our growth nerd, specific to 2020 investment series, right? So I know there's one of those ones right when I first came on the board that was a great.
Yeah, so that is a fund of one that has different sleeves underneath. The difference is that entire vehicle, the entire fund of one, is designed to wind down.
Sure,
It's not a perpetual.
Roll call.
Secretary Hall.
Yes.
Superintendent Buck.
Yes.
Treasurer Beadle.
Yes.
Attorney General Rickles.
Yes.
Governor Armstrong.
Yes.
Thank you.
Thanks, Greg.
Thank you, ma'am.
We got here before?
Sorry.
Been here before.
And I was telling everyone before, I was like, I have it's like 48.
Nobody wants to go to South Dakota.
We gave you a 28-degree day instead of a negative 20.
I wanted the full experience, but I had to
No,
explain the boat.
Back in time.
You guys can come to Texas too. It is. Thank you.
Thank you. Bye, everyone.
All right, I can move on to item 5 on the agenda, the litigation update, page 42. So the first one is the MHA versus U.S. Department of Interior case. As you recall, last meeting updated you that the other parties' motions for summary judgment were denied by the court. And the court said we want to move forward to trial. And so right now we're having pretrial discussions with the other 2 parties. A lot of back and forth about, you know, how witness testimony is going to look like, and who the witnesses are going to be, and also dates. So there's a lot, as you can imagine, with a lot of parties and a lot of attorneys and schedules involved and everything, and expert witnesses. Dates have been thrown around anywhere from April to towards the end of the year. So we'll let you know when that trial date is set. But right now it's kind of going back and forth on talking about dates and how what the trial would look like. So.
And we're trying to find a sufficient number of history nerds to help answer that ultimately difficult question.
Yep. Well,
History's, I didn't know if you knew this, but history is partisan.
Yeah.
Yeah, they're gonna line up on both sides. It's gonna be very expensive and,
Yeah.
yeah, it's gonna be awesome.
To hear that, yeah.
It's been so good.
the parties have their expert witnesses already.
Uh-huh.
They've already submitted reports and they've done depositions and everything. So the witnesses are pretty much identified. You can always try to add something,
Sure.
later, but the witnesses are pretty much already identified. And most of them are going to be experts.
Sure.
Yeah, either expert historians or surveyors. On the Leland case, as I mentioned, we had oral arguments before the Supreme Court on February 12th. And I thought it was very interesting, and I thought counsel did a great job. And it was Zach Pelham, who was our external counsel on that argument for us. And so we'll basically be waiting a decision, and that's be a month, it could be a couple months. So we'll just wait and see what happens from the Supreme Court. So. And then on the last case there, the state of North Dakota versus United States. This, as you recall, was the quiet title action we brought against the United States to implement the Continental Interpleader series of cases along the river, where federal lands abut the state ordinary high water mark, which is also known as the Wink Line. We did file our complaint on December 15th. I think they had till around this time to respond, the federal government, and they requested an extension to March 20th. So we did not oppose that. So that was granted. And again, this is not so much of that we want to get in a big, long, drawn out litigation with the federal government. We just wanted to push the issue so maybe we can get in discussions with them. I guess it could end up in a long, drawn out lawsuit, but I think it's more to get this issue, force the resolution of it, because I think the law is kind of settled through the Continental series of cases. So it should hopefully is applying that law to the rest of the river. So. Any questions on the litigation update? No. Okay, that is the last item we had on the regular session agenda. I believe there might be an executive session.
Yeah, it'll be quick.
If it was ready, Governor, I'd make a motion that under the authorities of the North Dakota Century Code sections 44-04-19.1, 44-04-19.2, that the board close the meeting to the public and go into an executive session for the purpose of attorney consultation regarding royalty settlements.
Second.
Roll call.
Secretary Howell,
Yes.
Superintendent Bachmeyer,
Yes.
Treasurer Beadle,
Yes.
Attorney General Wrigley,
Yes.
Governor Armstrong.
Yes.
Thank you.
This executive session will be recorded, and all board members are reminded that discussion during the executive session must be limited to the announced purpose for entering into executive session, which is anticipated to last approximately 20 minutes. Board members, their staff, employees of the Department of Trust Lands and Council with the Attorney General staff will remain, but the public is asked to leave the room. The executive session will begin at 10:12 a.m. and commence with new audio recording device. When the executive session ends, the board will reconvene in open session.
2 steps on.
I don't think you heard.
Are we recording?
We're on a new call now. Caitlin, recording's going here.
Yep, we're back and
Yes.
open.
Right. The executive session has ended at 10:33 a.m. The public is invited into the room. During the executive session, we had consulted with our attorneys and identified regarding the identified legal issue. No formal action or final action will be taken as a result of this executive session. Next meeting is April 30th. I have to be gone during our scheduled meeting in March, so I gave you guys even more time back on your calendar for the month of March. Does anybody have anything else for the good of the order? This meeting is adjourned. Thank you all.
Are we off the tape? Yeah.